Mark Miller, and this is Katie Minnendorf. We're the team leaders of the Signature Group at Century 21 Carolyn Riley Realty, located in Fairlawn, Ohio. We know that real estate can get confusing fast, and if you're thinking about buying, selling, or investing in properties, there's a lot of information out there, but sometimes the answers aren't always clear. So we're here to let you in on some of the conversations that we have every day as realtors, so we can break things down, talk them through, to hopefully help you get the answers that you've been looking for. So let's get started. So, hi Katie, how are you doing today?
I'm swell, thank you.
Awesome. So I thought that this week maybe we would talk about something a little bit different and talk about real estate investing. One of the terms that I hear a lot and I think is a little bit of confusing is the term fair market rent. So when people hear fair market rent, or sometimes it's called FMR, what does that actually mean?
Sure. So FMR is a term most often used when referring to single family or multifamily rental opportunities, investments on that side of things, and most often with affordable housing. Mm-hmm. Voucher holders are where we see FMR coming into play most frequently. So fair market rent, or FMR as it's known as an acronym, is the benchmark that HUD uses to identify what they believe fair market rent for an area to be.
Okay.
Now, it's not a promise of a rent amount to be paid, which I think it causes a lot of confusion, or a guarantee. It's just a benchmark.
Sure. So how does whatever city go about determining what fair market rent is for a property?
Now that is so good, and I wish and hope that if nobody takes anything else away from this video today, it is that if you're an investor who's out of our market, or looking to invest in a market that you don't reside in, that you do some homework with the local housing authority and or a local property manager before you start making assumptions based on HUD's FMR.
That's good advice.
Yeah, and here's why. So each housing authority, which operates the affordable housing program in a region. So for example, in Northeast Ohio, we have a housing authority for Summit County. It's by county: Medina, Summit, Cuyahoga, Stark, so forth. So AMHA is the housing authority that would operate HUD subsidies here in Summit County where we reside. Mm-hmm. So that housing authority sets annual payment standards. So you have fair market rent set by HUD. Mm-hmm. Then you have annual payment standards set by the local housing authority. And then layered onto that is rent reasonableness, which is what the market demands kind of by neighborhood, demographic, or zip code. So it goes 3 layers deep: fair market rent, housing standard, or the housing payment standard for the year, and that's set annually, usually in the last quarter of 25, for example, for 2026. And then in addition to that, they're going to break it down even more by neighborhood or zip code by looking at rent reasonableness within that specific community.
Okay. So I know that, you mentioned that we're talking about voucher holders mostly. So how does everybody kind of has different income, and I've kind of heard that income affects what someone is able to pay in rent. So how does that kind of factor in then?
Sure, that's a great question. And to me, another confusing little nuance that happens with affordable housing. So the value of a voucher is based on the size of the space or the unit and where it's at, right? Again, looking at those 3 layers. So that value of the voucher itself, would be the marriage of the property or the unit in question and the potential value of the voucher based on those 3 elements: FMR, the housing standard, and then the rent reasonableness for the community. However, HUD only permits voucher holders to pay up to a certain percentage of their income in rent contributing to that voucher. Typically, it's about 30%. What they're trying to do is they're trying to prevent voucher holders from being, house poor, or rent stressed. I mean, call it what you want, right? So they take those numbers that are pre-established, those benchmark numbers, and the rent reasonableness for the area and the amenities that may include it in the building, and then they're going to layer in the tenant's income to see if the tenant can actually afford to live in that space. They may have a 3-bedroom voucher, but if they want to have a 3-bedroom space in a higher rent supported neighborhood, which makes the rent reasonableness recognize the rent is being authorized as higher, if they don't have the income to support the utilities and the other expenses that are attached with that property, then one of two things is going to happen. Either HUD or the local housing authority is going to say, you got 2 options. Number one, we can offer you a rent for this, but it's going to be less than the fair market rent or the amount of rent you're advertising. Or they're going to say, unfortunately, we can't approve that because the tenant, based on their reported income, cannot afford to live there.
Okay.
So one thing about FMR that a lot of people, especially those who are new coming into working with affordable housing, which I do want to stress is a wonderful place to work, both in supportive community and doing good for people and its potential to offer great returns on investment, is that FMR or that payment standard includes the expense of all of the utilities that would be associated with living in that space.
Okay. I was wondering how utilities played into that.
Yeah. So if you work in easy numbers, the FMR is $1,200 for a 2-bedroom unit. So if the landlord is advertising $1,200 plus gas, electric, water, sewer, trash, that means the FMR is not $1,200 plus water, sewer, trash. That $1,200 includes the expense of water, sewer, trash.
Even if the occupant is paying those bills.
Yes. So what has to happen is the net rent to the landlord, you have to back those numbers out.
Gotcha.
So you are allowed to market it to open market tenants and even to voucher holders at $1,200 plus utilities because that may be the going rate in the community. But if the housing authority says it's $1,200 and you're asking for those utilities to be paid, you actually have to reverse the calculation on that and back it out. Now, the gap between that net rent and the utility payment on a 2-bedroom unit is going to be much smaller. Maybe that's only a $200 reduction or $250 reduction, right? But when you get into the gap on a 4-bedroom unit, that is going to be much bigger because to heat and to provide water for and electricity for a 4-bedroom house or unit is much greater than a 1 or 2-bedroom. So that's where you see a disparity that a lot of people don't take into consideration when they're working with the PM, they're advertising, or most importantly, before they actually make the purchase of that property, they're doing the math wrong.
Sure, yeah, and I know that's one of the things that I've always heard you say was that the bigger house has a bigger fair market rent on paper, but it doesn't always actually equal that. So I guess the bottom line is fair market rent isn't necessarily a guarantee.
Not at all. It's not a guarantee. It's not a promise. And it shouldn't be an expectation because there's too many other factors. There's the local housing standards. There's the rent reasonableness in the specific community. And also there's the tenant income that dictates, that is that kind of final lever of how much can be offered specific to that tenant.
Sure.
Just because a tenant may have a qualifying voucher doesn't mean they can actually afford to live there. So you have all of those factors, and contrary to what so many people believe, there is no negotiation on rent offers with HUD. So I'm going to go right in the camera. There is no negotiation with HUD on housing payment standards or FMR or reasonableness. Now there would be a variance in the offerings based on amenities or condition of the property. So for example, if there's air conditioning or a 2-car garage or some other amenities that might lift the value of that living space for a resident, or like an extra half bath. Those things you could actually eke out a little bit more value in rent that may bump it up. But their offer is their offer and that's it. It's just a formula.
Gotcha.